Welcome back to another episode of RWA Radio. Today we have the CEO and founder, Michael Revy of Bulla Network here with us. And usually these are all virtual podcasts, but we had a event here in New York City and we have the pleasure of doing an in-person interview. So, Michael.
It's great to be here, Travis.
Yeah.
I came to your earlier meeting and I was on a panel and had a really good time. And so now let's follow up with some more RWA questions.
Yeah, we just got done with Yield Day. Yield Day was the first time we've done this iteration. Obviously, RWA Day is one we've been regularly known for, but Yield Day was a major success, I believe, and at least that's what people are telling me. And I think you certainly were on one of the most popular panels, the Dividend Layer of DeFi, and Bulla is a perfect example of yield. So before we get into all the exciting things about the dividends and how people are making money on chain, tell us a little bit about Bulla. What is it? How did it get started?
Okay, great. Thanks. Bulla is P2P accounting. That's how it started. And what it's trying to do in the RWA space is tokenize working capital. It's going after that part of the business that's working capital. The Bulla protocol, what you can do is two things. You can do a simple credit, and then you can put it into a lending pool. We have both of those protocols working. And what it means is I can invoice. An invoice is a claim, like a simple credit or a purchase order. And once it's in the NFT that Bulla mints for you, then it can be financed in a pool. Yeah. So the idea, to me at least, is our Bulla lets you originate your own credit for whatever services you are providing, with the intention of possibly getting financed later.
Yeah, so you can, as a business owner, I mean, I've used the platform, so you can go on there and just use it for invoicing.
Yeah, basic and just simple invoicing.
So it could start off as simple as invoicing for a small, medium enterprise. I know you found some areas where there's even stronger needs and active needs where they want to turn that receivable.
Yes, yeah. So what happened was I started just doing invoices. We have three flavors of invoices. One is a true NFT where there are two addresses. It is a token. The others are hybrid off-chain. So if you want to keep data not so much on the public blockchain, you can do hybrid invoices. And then I met a trucking company who was desperate for getting finance for trucks. And this whole problem in trucking is 30-day, 60-day wait for a truck to get paid. Most of these people are delivering to AAA, AA kind of credits. The traditional way to do it is called factoring, and factoring is very expensive, slow. It's using the TRAD rails. And what's perfect about blockchains and about RWA now is these kinds of assets can be native. They're on chain. They're mint. They can start on chain. There's no do we need to verify, off chain kind of stuff. And then they can be financed. And so that's what we've started. We have a pool. It's been running about 8 months. And it's gone from about 100 to 250,000. Now it's back down to 100, but we've been growing now the last couple of days because I went with Truck Coin Swap to MATS, which is the largest trucking conference not a conference, it's a fair, conference, 50,000 people. They were very pro crypto. You would think truck drivers might not have a wallet even, but I was at one show where we were talking about the whole process, and I asked all the people there, well, how many people have a wallet? And at least a quarter of them raised their hand. So these people are, and it's because they drive in trucks, they do podcasts, they are aware, and they're really interested in this whole, product and how it cuts costs and speeds up the settlement.
Yeah, I mean, for the trade finance, you think about just global trade has been using this type of factoring concept for forever. It's been and as you noted, some industries fit really well into what you're decentralized this whole process where there's 5 people that sit between a debit transaction, 7 between credit, and you see the same kind of thing happen with factoring. And anyone that needs any kind of cash flow capital in that 30, 60-day window is great because it's short duration and it allows people to earn yield, essentially, for supporting these.
Yeah, I don't think traditional can ever really compete with the blockchain because it's instant settlement. So anytime you touch a bank, and I'm not an anti-bank person, but the banks are naturally slower. They have more, they can't settle as quickly on a blockchain because the pool has money in it ready to deploy. There's no, it's block time settlement. So that's the difference. And then there's on the other side, I think there's price discovery, because once you get all these things more public and known, and people can look up everything on Bulla Network, you can see the pool, you can see all the invoices in there, what their states are. Once you get more public information like that, pricing will change, right?
Yeah.
Because you'll be, well, look at the stats on the TCS, Bulla TCS pool. There are no defaults, maybe a couple of late invoices, and you can price it accordingly. Versus now, it's hard to get that data.
It's hard to get that data in any A quality, any kind of fund or anything. So like the transparency blockchain brings is outstanding. And I know bringing invoices, because they're already starting from an electronic form, not only are they short duration, but like we've talked about off camera, ultimately they present a source of truth. So like you said, people have visibility of what invoices are out there, what the pool looks like, the quality of the invoices on the pool. So yeah, tell me a little bit about that. And I think that ties into the name of your company as well, right?
Yeah, Bulla is, it's the ancient Sumerian for stamp. You would go to a market and bring a few specimen, let's say sheep. People would say, well, I want 10 of those. And you would sign an agreement to pick them up at the farm later. And who would stamp it would be the local priest or the, head honcho there would put a Bulla stamp on it.
I love that.
And the same idea is true for me. If I'm going to invoice somebody and sign it with my wallet, that's my signature, and it should have meaning, right? I can, of course, make fake invoices, but I think that would catch up with me sooner than later, much sooner on blockchains. Then the other party, too, my debtor, when they pay, you can see the behavior of debtors. So, then I can judge if they're a good credit or not. Like, how much should I factor? What's the target yield on that? Or this person. And then the other thing I want to mention too is P2P accounting is a very profound change, because it's not me to quicken to you. It's me directly to you. So whenever I mint an invoice, I am updating my receivables and I'm updating your payables right away. So you don't really have to do, a ton of accounting. You can also find things very all using Bulla. So it improves collaboration and audit transparency and makes you do business faster. So all things, to straight to your bottom line, I think.
Really is. I mean, that's a triple whammy of cutting out intermediaries. The way that Bulla has structured this, and I think the future that we're seeing, and I guess even just one thing to point out, because somebody that's watching that has looked at crypto from the outside, if you will, or digital assets in the whole blockchain space, they might say everyone's anonymous, and how do people get away with everything? But what's really exciting is, we know the blockchain tells all, but as you noted, there are ways to stay anonymous in crypto. But as you noted, the difference with Bulla is you've created really interesting flywheel and a checks and balances and reconciliation where someone's reputation is actually a real thing in your network.
Yeah, it's really pseudo-anonymous.
Yeah.
And I always tell people, just because pseudo-anonymity exists on the blockchain doesn't mean you're going to do business with people you don't know, right? And especially if you're going to ask for credits from a pool, there always has to be some doxing going on.
Yeah.
Because you have to verify who it is. If things go wrong, there's recourse. So that's normal to me. And business, the big difference, and we were talking about this earlier, is stable tokens, when they get recognized as an asset on a balance sheet, opens up the whole reason for doing P2P accounting at all. Whereas before this, I would demo Bulla to people and they'd be, well, we always have to offboard. We can't keep stable tokens. Call us when stable tokens are legit. Now they are. Or,
very close.
Close. So that will change. I think that stimulates a lot of business use for blockchains. Whereas before now, it's been, well, I'm only in stable tokens because I'm out of, let's say, Bitcoin, or right in between trades.
Exactly. Yeah, because there's roughly 300,000 plus stable coins. we were talking about this as well, is that there's over 50,000 on exchanges not earning yield at all. And obviously the stable coins themselves on a base layer none of them, of course, earn any yield. However, they're definitely not earning yield on the exchange. We know that for the most part. So a good quarter for sure. I mean, plus that's, there's many other layers to that are not earning yield. People are starting to wake up, even outside of, on our side of the fence, on the blockchain side, people are still just learning about these opportunities, about ways to earn yield. And I think it's the real world adoption, it's real world use cases. People are shifting and the sentiment's shifting into now there's real asset, real yield that you can earn on chain that's not first in, last out kind of Ponzi-nomics that really, paved the way to a lot of like learning and interest in the space, frankly. But, between that and staking, those aren't things that are going to fuel the next layer of adoption. It's things that you're building at Bulla. It's the real use cases where there's actual real businesses, real users. And again, we talked about this at the event of just, you have lenders and you have liquidity and you have the liquidation side. You really need to have all sides of that flywheel and a real use case that works there. And you're cutting out all of the other intermediaries throughout all those processes. And the reason why you're able to deliver such a high yield typically is because of that, right?
Yeah. And yes. Yeah, exactly. And there's ultimately price discovery, I think, will lower yields depending on what the risk is, because now you can see the risk as well. It's not you discover 3 months from now, the end of the quarter, when you get your little statement, oh my God, my hedge fund, my private credit fund is down 25%. Oh my God, I didn't know that. You can see it on the Bulla pool.
And you're definitely in a league, a very small league, not the only company doing it, but private credit, of course, has ballooned massively since '08 with non-bank lending really filling that in, KKR. And private credit, still, even at all the major wealth conferences, non-related to blockchain, just regular wealth management, I see the headlines. The headlines are the golden age of private credit. It's all these really fantastical, headlines about private credit. And the truth is that it really is like an amazing opportunity, but it's really a plus because now with decentralized technology, blockchain, and entrepreneurial use cases that you're building at Bulla, that changes even more of the opportunity. It makes the opportunity that's already existing off-chain, it amplifies it.
Yeah, access. It gives you access. It gives a lot of more people access. And our pool as well can be, anybody can make a pool at Bulla. You got to call me, I will fork it for you. So if you have, let's say, a vertical for private credit, and you are an expert banker at that, and people are using invoices or purchase orders, you can then start your own pool and improve what you're doing off-chain with something on-chain. I think that's pretty powerful too.
I mean, it's almost, even though, like you said, you kind of have to have the network to make that make sense to fork it, but it's almost like you're creating mini franchises on chain. Like, that's the fair way to think about it?
Yeah, that's the idea. The TAM on working capital is, I don't quote, I think it's $200 trillion. It's like, massive number. But that includes all kinds of weird, strange businesses to very traditional ones. I think every business that has any 30-day wait to get paid on a service is a natural candidate for what we're doing.
There are dozens. Yeah. So I think, like you mentioned, what really is, like, aside from the fact that you've already gained traction, which is exciting, even in a very headwind-driven environment up until the past 6 months, roughly. The tailwinds are shifting. Stable coins are coming front and center. People are going to start getting paid in stable coins. They're getting settled in stable coins. Stable coins are going to be recognized on the balance sheet, as you noted. So that really changes a significant amount of this unlock of the liquidity side of somebody that wants to earn yield. Yes. As it relates to the 30, 60-day potential clients, those are also could be more plentiful once they start seeing how the whole loop works, particularly with stable coins being the layer zero for you guys.
Yeah, and even if you have stable tokens lying around, we have a subscription agreement still to join the pool, but that I'm working on getting rid of. So it would just be KYC AML. All you have to have is a wallet to connect to Bulla Network. Go to the finance pools. You can see them now, but the game won't be lit up for you you have to sign a subscription and then I know your address. So it's a
Okay.
whitelisted address now.
Mm-hmm.
But once that goes away, I think then we should see more participation, especially if you've got some USDC and you don't want to necessarily send it back to USD and then wait 3 days to get out of your bank account.
Well, yeah, and there has been a lot more of this discussion around putting your stable coins or USDC or USDC and USDT obviously have the lion's share of the market, but I am noticing more and more people kind of getting this concept of put them to work. And partly it's because the people that are digital native, they've been trained because crypto markets are obviously very volatile. So the digital native crowd is trained to have dry powder. They go completely into the safest zone possible and have dry powder. And that's not really smart when it comes to investment management skills. It's just more of it's a little bit of a PTSD from the way the markets are. And I think people are learning that because there are real use cases, as I noted earlier, and as you explained really well, there are reasons to put it to work that not only are improving the lives of businesses and users, and because for the most part, I mean, we kind of jumped over that, but I mean, the reality is since '08, with the whole void that we were talking about with private credit, truckers, many of the industries are in a position where they can't go to their bank, traditional lending, to get a factoring kind of arrangement or get some kind of
difficult
capital, right?
Most trucking was decentralized itself, so it's
Sure.
funny that it's the easiest industry to now go after on blockchain, but because it was decentralized, it's now typically 4 or 5 truck kind of operation. And if you go to a factoring company or a bank and try to get credit, of course, it's going to be a pretty big process. A bank has a threshold for their cost. Like, I'm not going to do the due diligence on your 3 trucks because I can't afford it. My costs are already too high.
Right.
Whereas blockchain eliminates most of those costs. So somebody who's running a pool like me, I don't have the overhead that the traditional guys have. So I can go after those smaller private credit opportunities. And that's why this market has been so fragmented, right? Because you didn't have the big banks had to keep capital. They had ratios they had to manage, right? They couldn't go after, I'm sure they wanted to, but they really couldn't regulatory wise. They were strapped. So that's why you had this, hedge funds going into private credit at all. But even those guys have a, high cost basis that blockchain removes.
And we've seen the same thing really just from the whole employment market in general, like the whole shifting of what it looks like. The gig economy is a great way to kind of put it. But like ultimately we've seen this shift from people staying at companies for 20, 30, 40 years to 20, 30, 40 days, or whatever, so ultimately those are major shifts that align really well with your thesis of short duration, smaller. I mean, we have AI as a perfect example too. The way that AI has improved, we're now in the age of the idea person. Like if you have an idea and you want to exercise it, the big companies don't want you there for 20 or 30 years. And there's much more opportunity to do things on your own. Even for people that aren't, quote, self-selecting as an entrepreneur, the tools are now there that allow them to be a technician even in an entrepreneurial society. And I think that's what's really, I see a lot of the shift is you have so many of these small companies that people would have never put that hat on and said, I'm an entrepreneur, but they realize that it is the best way for them and that there are the tools now exist. I mean, Shopify did this for people that wanted to sell things. If you think about people that sell things on Shopify, I've met so many people that sell things on Shopify that literally would never have had an online store.
Right.
And consider themselves a commerce owner. And now we have millions of people doing that. That is exactly what blockchain is going to be doing for all of these things. What Bulla can do to step in, all these smaller companies that are needing those capital relief phases. And again, they're short duration, they're lower risk, and you're providing transparency to that as well, which is great.
Yeah, and it's composable. Bulla is open source. I mean, there is a lot of metadata to understand with those contracts, but that's the idea: is to plug and play, rebuild, collaborate, and redo it and iterate. I think that's where the world is headed. I'm talking to other people in DAOs, people who are tech people that want a particular piece to it to plug into whatever their DApp is doing. All stuff like that's happening.
Beautiful. So a couple things that maybe not the exact order, but you're on multiple chains.
Yes.
So how does that factor into this as it relates to the pools? I know that matters in a lot of ways, but what are the factors? I mean, I know you've deployed on multiple chains, which we all know that we're in a multi-chain future, so that's an exciting thing. But I'd love to hear more about the backing of why you did that.
It's a dumb reason, but it's cost. Yes. So wherever you can do it cheaper, because it's short dated, it's not like I need Bitcoin finality on these things, right? So I can go to faster blockchains that have a little less, that aren't as secure as as Bitcoin.
Sure.
And to give that up, you have cheaper gas or faster transactions. So that's what's been driving it. Initially, we were on ETH mainnet when we first launched, and then all the all the Bored Apes. We did our launch when Bored Apes was happening. So the invoices,
$200
exactly.
gas fees. Oh, no, I've done like membership airdrops and things like that to people in our community, and even sending like 20 of them. I remember it costing like $2,000 or something great. It's like it's insane. Like you're having to stay up until 3 a.m. just to try to send
waiting, things. Right? Yeah. Waiting for the dip. So that's what it's based on, and then it's based on also who is doing what on any particular chain. So we have a lot of people. We still have a lot of people in mainnet, because that's where
there's a lot of liquidity there.
A lot of DAOs start there. A lot of DAOs want that Ethereum security versus, let's say, other chains. Mm-hmm. But then we have a lot of activity on Polygon, Avalanche, Arbitrum, and Gnosis, or I forget what they're called now. Gnosis, Safe.
Yeah.
And Base. Base is big. Base is what I like about Base is you can tell users, well, open an account at Coinbase and then eventually get a wallet at Coinbase. And then it's very easy to, put everything together. That user experience is a nice one versus having, I'm going to be an Avalanche user, but there's no bank that's attached to Avalanche necessarily. So
sure.
The Base has a lot of people, I think, because of that.
Yeah, no, I think that makes a lot of sense. And then the pools mainly you're seeing the highest amount of,
Yeah, they can be anywhere. We have now 2, mainnet and Polygon.
Okay.
We're doing one. This will be interesting with Wyoming stable token.
Oh, that's
be cool.
Yeah.
Right? That's only in test. We can do it on any token, by the way. You can invoice in any token, native included. So, if the dollar goes away, you can invoice in ETH if you want, or wrapped Bitcoin. And we've been experimenting too with some of the pools, like what's the base currency of a pool. Doesn't have to be USDC. Could always be, let's say, ETH, because everybody's talking about these treasury. I'm going to put my
Michael Saylor,
Joe Luton buying the native.
Yeah,
same kind of idea. I don't know if that complicates things. It's always, how much do you want to offer somebody, or do you want to let them make their own decisions? And so I think we're going to remain purists. It's just dollars and dollars. And you can redeem and then buy native for your treasury, or you can stay in the pool. But we're not going to complicate your life by, trading inside of a pool.
That makes sense. I mean, definitely is interesting, and Sailor's done, and some of the other ones to kind of iterate from there. I mean, I've heard even ones. There was just an announcement the other day or some rumblings that there was one happening on Avalanche.
Really?
Yeah, they're doing a very similar Michael Saylor kind of approach there on Avalanche. So that's interesting. I mean, I think that will continue, but you're right. I mean, there's still probably won't be enough demand past the top 10 or 20 tokens, of course, and ones that we feel like, I think people feel like there's fair price discovery there, or, the number goes up, so to speak, as people. I've never been a big advocate for the same reason of using Bitcoin, as a payment method per se. I mean, like you hodl it. Yeah. I mean, you obviously, you collateralize it.
Sure.
And you get dollars. You use those dollars to buy coffee. You don't use your Bitcoin.
Yeah.
But at the end of the day, everyone has a different approach to things. But I think we're on the same page with that. But I think what's interesting, going back to where Bulla is, I'd love to hear about a few other potential use cases that we talked a little bit about. And I'm talking more from the issuer side of someone coming in, if there's an enterprise that's looking to do this, I'd love to have, maybe a couple other ideas, like someone listening out there, they're a business owner, or they maybe know someone, or they have a friend or family that's in this kind of industry. I'd love to hear a couple other ones. You think, trucking, we've talked about, of course, multiple, as you noted, 200 trillion, total out there, but where do you see some additional low?
Well, I think there's a lot of pain in healthcare, getting payment from the government for doctors or, healthcare in general, because at the end of the day, the government is, even though it was downgraded, still I think it's a double A. Is it still double A? Double A minus, I think US.
Yeah, almost triple A, just a tad under,
a little bit under.
Yeah.
So there's a perfect application that, the government will take 60 days to pay, but a doctor's office might want to get, money faster to, I don't know, buy another machine or.
That's an outstanding one.
Right. So that's a great area I really am interested in. Any other area where service, it's what's important to distinguish, we talked about this too with RWA, is the component of service. If it's high, it can be native. And if it's native on a blockchain, then it's more truth and less trusted. And ergo, you can finance it. So service industries that have lags. So lawyers, right? How often I try to avoid paying my lawyer as long as possible.
Yes. Yes.
Same idea there. Or advertising too, marketing, all these companies, any service that you're waiting 60 days and you don't feel like you need to, and you would prefer to have cash, would be a great opportunity to use Bulla. And then you asked about other things that Bulla does. We have it's P2P lending too. So you can do what we call a friend lend to somebody. And we will be adding a finance pool for friend lends. And I think that's something that, the way it works is if I know your address, I make a token offering to you for money for, let's say, 10%. And you can accept, and you get the money, and then what comes back is basically a claim, an invoice back to me, and then I can finance that. And that all came about because we were deploying on so many chains, and I would get a developer like, "Hey, Mike, I have no AVAX." And I would just send it to them, and now I can friend lend it to them and keep track. Like, hey, I sent you $2,000 in AVAX. Come on, you gotta either pay me back or give me a discount on the invoice.
I love that a lot. I think I keep thinking of the funny advice that everyone gets is never do business with friends and family. Like this, you just saw you completely.
It's on the blockchain.
The reason why you can now do business with your friends and family, and I think that because it's not because they're your friends and family. It's because financial issues can really ruin friends and family relationships. And it's generally because there's not some kind of agreement in place that makes sense.
It's not documented, or you forget.
Yeah.
And what's great at Friendland, I can pull up the token, and then I can resend it to you with a URL. So it just pops up on your screen like, hey, here's my token. What's the story? Are you money good or not?
Right.
Same with an invoice. That's what's cool about Bulla is it's just URLs. So you can show any modal on Bulla. So any invoice, any paid invoice, any loan token, all of that stuff. If you understand how to build the URLs, you can just import those into your front end.
That's really cool. We talked about the enterprises bringing money in. So from a lender standpoint, who's supplying funds right now to these, and who are you looking for? If someone's out there looking to earn yield, what does that look like? Who's doing it now? How can they get started?
The people I've been talking to are generally high net worth people who have already a wallet, a multi-sig, and have some crypto exposure. And they want to do the 60-40. They don't want to just be long Bitcoin or on or off Bitcoin, right? Because that's what they've been doing. They've been buying wrapped Bitcoin or ETH for a while, and then they'll sell it and sit in a stable token. And so I come along and say, well, have you heard of 60-40? Maybe you need a bond portfolio to hedge your equity, which is essentially what Bitcoin is.
Yep.
So those people have an interest because then it's a 30-day kind of turnaround. So it's still liquid. They can get out. The target yield should vary as well on Bulla if SOFR changes a lot. It doesn't change every day, but right, SOFR is pretty much four and a quarter or something. But that's where I'm getting interest, is people who are already crypto native, but understand portfolio theory a little more.
Yeah, it definitely is more to unpack. As more people are holding stable coins, like we mentioned, with the Genius Act passing and all of the things that will come from that windfall of stables becoming for everyone, right? Like, and everyone's using them. We will see a much easier pathway because there's still friction, right? Like, to get on board. But you're exactly right. It's kind of funny because obviously the whole retirement perspective of 60/40 brought to blockchain is the Bitcoin focus. And we're seeing such a tremendous opportunity for people that have held Bitcoin. And like you mentioned, they've kind of had the same concept of, like I mentioned earlier in the conversation about this whole PTSD thing in a way, like it's like they go right to dry powder and they sit there. But if they employ a little bit of the buy, borrow, die investment methodology where you're taking that 60% and you're just continuing to collateralize that. And again, that's where Bulla steps in. Bulla is a perfect place to collateralize and earn yield and rotate back over.
If you're a company and you have a treasury, you can then tokenize your working capital.
Sure.
Right. Fund your treasury that way. But if you're an investor, like we were talking about, 60/40 suddenly makes sense. Like, okay, I have now my dry powder. It's actually earning 11% or 10.5% on trade receivables. I can get out 30 days, probably faster, depends on the liquidity in the pool. But that's the next frontier, I think. I think the collateralizing Bitcoin and lending against it is an attempt at a 60/40.
It is, yeah. I agree. Yeah, noted. I would agree with that. I think that's, it's just that selling Bitcoin is not an option. It shouldn't be for most people. So I think that's where they're constantly looking at ways to, that 60/40 is on the traditional wealth management front has been eroding for decades. And I think it's at this point, in a lot of cases, like, the true professionals are definitely not advising on a 60/40 anymore. And I know that it's just kind of structurally what we all think about is that 60/40 thinking in all aspects of wealth. Yeah, I mean, I think it's an exciting way to get access to Bulla. You mentioned 10 to 11%.
Yeah.
I mean, that's double-digit returns. Obviously, you're going to sit in treasury bills. You're at 4%. Maybe you have an option through a private banker and you're getting 6-7% for some kind of private credit deal. But you can go 5 points higher, roughly, in some of your pools.
For no risk, really. Not for the same risk. For AAA corporate risk. Actually, corporate risk might be lower than treasury bond risk. I remember when corporates traded through the curve, right?
Yeah.
So, yeah, anyway.
Yeah, I love the use cases and really excited what you built. Anything else you want to share? Anything we missed? I know we covered a lot of things.
The Bulla Finance token, it just accrues. So it's not like you have a token that's getting dividends. You redeem it and then get your principal back, and if the pool performs, some yield. And what that does, of course, is makes you a short or long-term capital gain. But I'm not a tax expert, so don't quote me on it.
Not financial advice, but that is excellent news. Yeah.
But that's the idea, and I think that's the idea with a lot of stable tokens is you just own it, and then when you redeem it, you bought it at 1, it's now 110. Okay, I've got $10 in profit, but that's a capital gain, not a yield or income, dividend income.
Love that. So we did a little bit of like looking into the future here, but I think we can close on kind of thinking about, we've seen just a tremendous shift in our industry, lots of excitement. Obviously not all of it's tangible results for all of us yet, but we are seeing, interest. You have a working product. You've been building through times where lots of uncertainty, and you're starting to see that deal flow work now. So it's really exciting. It really gets me, just jazzed to talk to people like you that have been in the trenches and have committed over the past few years to stick with this. And I think certainly you're going to reap a lot of rewards, but I'd love to hear what you think personally. We kind of like what the future looks like. What do you think Bulla, how it fits in with these next things that are going to be happening with blockchain? And
well, I think Bulla as I keep going back to, where's the financial browser for DeFi? You have a bunch of platforms that show you your current balance, maybe some other data. But if you really need to keep track of things and you're not so handy with the scanner, and scanners are all getting better. Bulla is a great alternative because you can browse, you can see what you've been doing. I do 8949, 1099s, all this stuff. It's all there for you. And I think at the end of the day, if you are using Bulla for just doing plain old invoicing, right, you can do that at 1099 at the end of the day. We also do some payroll, but not the payroll tax stuff. The belief there is, because I think people are still going to be 2.53 for a while.
Sure.
So it's more like, here's the data, and now you can do the 1099s for everybody. And even if I paid you 50/50, it's still going to go to the accountant for the final right data out.
Yeah.
But the what I'm trying to say is Bulla will become more and more of a pretty important tool for you to manage your business if that's what you're doing on chain, to keep track of everything that you've been doing. It does NFTs, understands swaps pretty well. It doesn't understand all of them. Some of them are very complex, and there you have to go to even higher level people. But for the basic business person, Bulla is a great tool to keep your accounting under control and get it to your accountant, and not, I talk to so many people who are oh, well, I don't know if I want to attach my wallet to Bulla Network because, well, I don't really even know what transactions I did. This takes the fear element away. You can see things, and I think that's the basic kind of value proposition for Bulla. And then on top of that, you can do friend loans, you can finance working capital, we can do pre-funds too, all kinds of tools that you can put together with a claim.
It's like it's a SaaS working capital Web3 SaaS system that will really revolutionize, again, like this whole evolution of a lot of the industries we already talked about, some really low-hanging fruit, but ultimately this will be how people are paying people.
So, yeah.
Even in our side of, for our Builders network, 80% of our clients and people on our network pay in stable coins. Of course, many of us are, believers and are the native side, but that is a real thing that will be coming forward to the masses, making payroll, having that capital, the working capital, dashboard that you're able to send invoices and get paid in stable coins. Everybody's going to be looking to get paid in stable coins. I mean, I know that that's my preference, right? Like, you only have to, this is one of those, once you see it, you can't unsee it.
Yeah, 100%.
It is 100%. You are a believer, and you want to tell everyone that you just want to listen, right? So,
and what's cool too is you start using Bulla, you have all that data. Like, I know all the debtor addresses I've interacted with who have bought stuff for me. I can airdrop. I know I have the list. So you can start to think about, well, how can I collaborate more with my customers? How can I get more of a deeper relationship with these people? Using Bulla, you can start to do that. You can really collaborate on a much closer level than otherwise.
It really does. It has that pseudo-anonymity type of aspect of it, but it allows you to even have a reward, like you said, like kind of think of it like a reward system, a connection, a way to make a connection. Yeah, I love how you're thinking through all these touch points, because ultimately, we talked about this before we went on camera, but most of the builders still in our phase right now, they're building in silos. They're building something for Web3, and they have something over here in Web2 that's an RWA, but they don't talk. And building that bridge is really where the big wins are going to come. So, I mean, I salute you for that. I'm really excited about the next phase for Bulla, and really, really appreciate you coming on the show. And glad we can do this in person. So this is a fun way to do it.
So, thanks.
Well, as we close out, why don't you let everyone know where they can find you, and anything else, if you have any parting words?
Yeah, our URL is bulla.network, and you can get in touch with me there, or at Mike Revy, Telegram. And of course, I'm on LinkedIn, Michael Revy.
And make sure you follow us on RWA Builders, because we do highlight our network. Bulla is a network member of RWA Builders, and they're actively going to be in the newsletter, and we'll make sure to publish updates there as well. So make sure you follow all of us, and we'll keep you posted on all the new developments on RWAs. I mean, it's really exciting. It's hard to keep up. So look forward to having you back soon, so we can touch base again. Thank you.
Thanks, Travis.